This episode is made possible by NetSuite by Oracle and Brex, the AI-powered spend platform.
Hi, this is Natalie Lackman, CFO of MedSpeed, and you are listening to the CFO Thought Leader podcast.
This is episode 1029.
We need to get growth back. We're growing in the low teens. We need to get growth, up into the high teens or into the 20s. The market is growing 23%. We should be growing that fast. How we're going to do that is we're going to improve NDR, which is getting our existing customers to spend more with us, and the finance organization plays a big role in understanding what's going on with those customers and trying to identify those customers that have a higher propensity to buy. And so we're doing a lot of analytics work, working with the go-to-market organization.
Hi, it's Jack. On today's show, we speak with Matt Steinfort, CFO of DigitalOcean. Matt Steinfort's career journey is a testament to the power of versatility and timing. While most CFOs climb the career ladder through finance-related roles, CFO Matt Steinfort's path took a significant detour, one that saw him leading a company as a CEO for more than a decade before unexpectedly stepping into a finance leadership position. You'll hear that story and much more on today's episode. We'll begin after this. 37,025-1. These are the three numbers to remember to get the visibility and control you need to make the right business decisions instantly. 37,000. That's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down expenses. 1. Because your business is one of a kind, you should get a customized solution for all of your KPIs in one efficient system and with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. Right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance, absolutely free, at netsuite.com/KPI. That's netsuite.com/KPI. Hello, we're speaking with Matt Steinfort, CFO of DigitalOcean. Matt, welcome.
Hey, Jack. Thanks so much for having me. I'm very much looking forward to the conversation.
Yeah, likewise, Matt. You have an interesting background. I always say that up front to intrigue our listeners a little more. It's not a traditional finance path. And we were looking forward to exploring some of the milestones or experiences you feel prepared you to eventually get to the CFO office. But it doesn't look like you're in too much of a hurry. But Matt, go back in time, will you please, and share with us what were those experiences that led you to this role eventually? What comes to mind?
Yeah, that's a great question. I kind of think of myself as a little bit of an accidental CFO, and it's funny. I get a little bit upright when people say, "Hey, you're the finance guy." I'm like, you clearly didn't look at my background. I've been a finance guy for a handful of years and a much longer career. And I guess I like to think of my career in three different phases. Early in my career, I was a consultant. So I started off in IT consulting and doing like client server development and rapid application prototyping. It was leading edge at the time back in the early 90s. But I really liked business. I liked technology, but I liked the application of technology to business. And so I went back and got an MBA, and then I went to Bain and Company, one of the big consulting companies. And it was because I liked solving problems. I like math, I like finance, I like to solve problems that involve data. And it was a great education. Like being in a consulting company, early in your career is as good an education, I think, as you can get. And they taught me a lot about the power of bringing data to bear to help make decisions. They quoted the Edward Deming quote that I love. I quote this all the time: "Is in God we trust." And I'm paraphrasing. Everybody else bring data. So it's the power of using facts and analysis to make your point is can be way more effective than just kind of strongly advocating for something. So that was a very powerful part of my career, and that analytic kind of bent and ability to take complex data and make it more clear and understandable by people was something that was super helpful. But then I moved into industry, and I didn't really change roles so much. I became a corporate strategy and corporate development person inside industry, and I joined Level 3 Communications in the kind of late 90s and right at the beginning of 2000. And ironically, it taught me the data and analytics isn't enough. And so I was like, okay, I'll come in and I can analyze things. I can show you the data. I can make compelling recommendations. And if it's okay, I'll give you a story that my first, I was probably there 6 months, 9 months. And I did an analysis that was looking at the company's spend and our cost profile. And if you know anything about Level 3, it was one of the big kind of fiber infrastructure companies that was kind of breaking ground and putting billions of dollars of capital into the ground to build out the next generation of fiber networks. And it was a technology play. It was going to have a lower cost, and it was going to have a massive amount of capacity. And I did this analysis that suggested that, at the rate we're hiring people, the cost of the technology is going to be such a small fraction of the overall costs that even if we were half the price or half the cost of the next provider, we'd still have such a bloated overhead that it wouldn't make a difference. And my group manager thought it was a really compelling analysis. I had just come from Bain. I was bringing in all these kind of new ideas. And so he put me in front of the executive leadership team. So Jim Crow, the CFO, the entire C-level executive team. I presented the analysis, and I hadn't pre-wired anybody. I didn't even know I was going to be presenting, so it was kind of a last-minute thing. But I presented, and Jim looks at me and he asked one question about some random kind of variable, which was insignificant. It would make a difference in the analysis. And I told him what the assumption was, and he says, "Well, that's not a good assumption." And he took the deck and he slid it across the table and he said, "This is not useful. Thanks." And then and then I got to leave the meeting. And the point was I hadn't done anything to kind of socialize the conclusion. And the conclusion was 100% counter to what the entire group of executives around that table thought. And turns out later, literally within like 3 or 4 or 5 months, we laid off 25% of the company. It was right at the beginning of the telecom meltdown. So I was correct in the math that I did, and I was entirely ineffective because I didn't present it in a way and socialize it in a way that I enabled them to receive it. And so that, huge lesson for me, which is you can be right. That's great. It's good to be right. But boy, to be effective, you have to be able to convince people that you're right. And sometimes it requires enabling them to reach the conclusion in a way, in a time frame that's different than you might think. So those were, I'd say, the key takeaways of phase one of my career. Phase two of my career was actually decided that after 15 years or so of being a smart guy consultant and giving a lot of advice to people, but not actually being the one to have to own that and follow through, that I'd take a crack at trying to build and run something. So a mentor and someone that I worked with for a long part of my career, Dan Caruso, and I started a software company, a SaaS company in 2006 with a CTO who was a good colleague of ours. And so I built and ran that software company for 10 years as the CEO. And boy, what a difference going from being like, hey, this is a great idea, or I see a flaw in your analysis, and having your career be based on giving people suggestions, to being the person in the hot seat. And everything from learning to take risks, we were just building the application. We didn't even have it launched yet. It was in, I'd say, alpha, not even really beta. And I was just like spamming, cold calling people. We sold basically to restaurants and retailers, and it just so happens that Chipotle happens to be headquartered here in Denver. And I got a call back, and they said, "Hey, we're about to switch providers, and why don't you come over and just show us what you can do?" Because literally, we're about to sign a contract for in the next couple of weeks. So we sprinted over there, and again, it was a shaky beta at that point, and we got to their offices. We couldn't get onto their network, so we used the Wi-Fi from the coffee shop across the street. So we were connected to the coffee shop Wi-Fi. We're in a room with a couple of executives at Chipotle, and we pull up the demo and we're firing it away. And it was enough to convince them. In fact, the fact that we were scrappy convinced them, that these guys are hungry and they'll work hard for us. So learn to take risks. Also learned what it's like to be accountable, for people's livelihoods and for the culture and for the kind of the optimism in a company. That's a very different kind of skill set than being in a consulting organization. Another example I'll give you is just of how that kind of is seared in my brain is we had one of our largest customers right before Christmas. They had an executive change over in the prior months, and right before Christmas, literally the 24th. So everybody's about to go, on holiday. I was about to go meet my family. They sent me a note saying they were going to breach their agreement and cancel their service, even though they were under a multi-year service. And it was the 24th. Well, we had a debt covenant that was based on the recurring revenue, and if we knew of a churn event, then we had to subtract that from the debt covenant, and we measured it every month. So on the 31st, we were going to measure a debt covenant that this guy had just sent me the zinger right before the holidays. And we were going to violate the debt covenant. And so we wouldn't be able to pay, wouldn't be able to make payroll. We wouldn't be able to do all these things because we couldn't draw on our working capital line. And so I had to rush wire personal money into the company to get the cash balance above certain levels so that we didn't violate this debt covenant, just to get through the holidays when I could actually talk to the customer. I could talk to the banks and everything. And it's just that level of kind of the pressure that goes with that is, particularly when you're in parts of the organization, sometimes you don't fully appreciate the stress and the burden that others in the organization, the CEO and others might face. So that was, a huge lesson for me. And I learned a lot in that experience. And then phase 3 of my career is after having done that for about 10 years and realized that, look, it was a great company. It was a successful exit. We ended up selling it to Motorola Solutions, but I'd been doing it for 10 years, and it was clear it wasn't going to be a rocket ship. It was just going to grow steadily, and I had some family things that I was focused on at the time, so we decided I would move on to the board and stay involved, and then. Quicker than I had anticipated, I jumped back into work and ended up joining Zayo Group, which is, again, back in the telecom space. And I started as just I had most of the corporate functions. So I had corporate strategy and development, FP&A, investor relations, HR. That company was going through a stage in its development. It had been public for a couple of years, and a lot of the founders had been so successful that they were looking to move on and do other things. And the CFO, raised his hand, said he wanted to retire, and I stepped into the rest of the CFO function. I picked up accounting and tax and legal, and ended up doing that almost 3 years as a public company. And then 3 years as a private company before leaving in I guess 18 months ago to join DigitalOcean. And in my brief, if you'd say calendar years out of my career, it's only 7 out of 30 something that I've been a CFO. But I've seen a lot. At Zayo, we did multiple $1 billion of acquisitions, divestitures. We raised a tremendous amount of debt. We had activists all over us at the tail end. We had a wild kind of bidding war from most of the top private equity firms in the world to take us private. And we went private, and at the time, the largest telecom take private for $14 billion. It was a crazy time. And then I stayed with the but the company is really the only C-level executive that stayed, after the first couple months of the acquisition. And then I've been here for 18 months and having an absolute blast at DigitalOcean. And I think it took me a while, as you said, but I think I found my calling. I like being a CFO. I like being in this position, and it's a lot of fun.
Great overview for us. I didn't want to interrupt because I know it's a complex path, but I just would love to give some of the time frame. Roughly, you're about 6 years as a consultant and advisor between Bain and the earlier technology company that you were a consultant for. Level 3, you were there 6 years. So it's like a dozen years before founding the company and, the entrepreneur chapter. I don't know how you like to think of it, or a business building chapter where you're the founder, the president, and the CEO, another 10-year investment there. And as you just described for us, it's interesting. You enter the doorway as sort of a strategy, C-suite strategy, corporate development executive who, when is offered the CFO job, I don't know, you shrug and say, okay, sure, why not?
Yeah.
There are recruiters out there, they could have filled the role, but you raised your hand, I would imagine.
Yeah. And so one of the things I didn't highlight, which I should, because it's been a huge part of my career, is I likely wouldn't have gotten that opportunity, as you said. I mean, why would a public company hire someone with my background at that stage of the company and at that size of a company, when they're public? So the person that is the thread through my career is a very successful entrepreneur and operator, Dan Caruso, who was one of the founders of Level 3. I left Level 3 to go with him to ICG Communications, which was a short, kind of less than 18, 24 month. He took it private, and we broke it up and sold it off in pieces. It was a really successful exercise, and the investors made a lot of money. Those same investors, along with Dan, founded with me the Envision. So he was the chairman, and I was the CEO. And then 6 months after we founded that company, he founded Zayo, and literally in the same offices, so right across the hall. And in fact, for the first year, it wasn't even a hall; it was the same open space. And he had a desk that was a little bit further down from where I sat, and they started building that company. And so I was there from the beginning. I just wasn't part of that team. And the CFO was a good advisor for me and helped me with the CFO at Zayo, Ken Degerenz, was a great advisor to me and was very helpful in getting Envision going. So we were basically cohabitated for, it's 8 of the 10 years that I was a CEO. And so when I left Envision, and then Dan was like, hey, why don't you come over, here? I think the executive team is starting to get a little tired, and you're a utility player. You could fill a lot of different roles, and not sure what it will be, but I know you can do these corporate things. So why don't you come over and just do those? And then I hadn't anticipated that Ken was going to, be the next player to raise his hand. It could have been really a variety of roles. But when he did, and I had been there long enough that I was like, okay, now I understand better what he does. And I have a really good sense of what's going on in the business and the things that the CFO does that I wasn't already responsible for. I had done at a much smaller scale. I'd raised money. I had, built business plans. I had pitched investors. I had done a lot of things, just not at scale and not in a public company. And I had the luxury of, I had a great kind of track record with the CEO, with Dan. I had a great track record with the CFO who was departing. And I had the confidence of the board, many of whom I had worked with over the course of my career in a variety of different settings. So I'd say that's why I said I'm accidental. I wouldn't say I lucked into it, because I put myself in a good position and I raised my hand and I was able to build the confidence, but it was the stars aligned to give me that opportunity, and and I took it, and I've been very, very happy with the role and just the nature of how to add value in a different capacity than what I had been used to.
And would that be the investor relations piece of it? Was that you had spent a lot of time talking to investors, but not the same thing as quarterly earnings calls and all of that, is something you was that a piece that you hadn't dealt with, or what was the?
Yeah, I definitely hadn't dealt with that. And I give you an example of, I learned the difference between a few and a couple. I said, because in one earnings call I said a few quarters, and then the next earnings call I said a couple, and the analyst got all over us, like, are you changing your guidance? And I was like, well, no. And they're like, well, you said a few last time, now you're saying a couple. I was like, okay. I thought they both meant a small number, but I guess I'll learn to be a little bit more precise in my communication. So there was that kind of learning, but and this is where I trace again all the way back to Bain, like being able to explain complicated things in a simple and straightforward way, having a command of numbers, being respectful and being a good listener, like all of those things that I learned throughout my career made it relatively straightforward to move into the investor relations side. What I didn't know were little things like that. Like, okay, but it literally my first week I was like, okay, what's the difference between buy side and sell side? I didn't know the terminology, and so it took me a little while to figure that out. But that is a part of the role that I really enjoy, and I think again draws on my experiences.
All right. We're right there. As you explained, you joined DigitalOcean in your latest CFO chapter. And again, you had a 3-year tour of duty as a CFO in a publicly traded company. Let's begin by just finding out about DigitalOcean. What was this company that, you saw the opportunity? What sets it apart? Why is it the opportunity you said, yes, I'll do this?
Yeah. So DigitalOcean is a cloud service provider. We're like Amazon Web Services or Microsoft Azure or Google Cloud. Very simply, we provide computers, and so think of the storage, the compute, and the bandwidth to companies so that they can run their software on those without having to buy their own equipment or make their own relationships with data centers and try to figure out how to get connected. So what we do in kind of at a higher level is we simplify cloud computing so that developers and small technology companies can spend more time building software that changes the world. Like that's our tagline. And so, if you think about it, we have 650,000 customers across the world. 70% of our revenue is outside of the US. So it's tiny little developers to bigger companies. They're small in the grand scheme of, they're not enterprise companies like a JP Morgan or a large bank or even a Chipotle size kind of a company back to my earlier days. They tend to be small companies, less than 400 or 500 people, but they're very technology driven. So they're building apps, they're building websites, they're using technology to provide services to their customers, and they can come to us, and then in just a matter of minutes, they can learn about the technology. We have lots of tutorials of how to build software, and videos, et cetera. That's what draws people to our site, and then they click a button, put their credit card in, and they're up and running on our service, and they can spin up their own applications. And so we don't really have a sales organization to speak of. It's all what's considered product-led growth. So people come in to learn about our product through all this extra content that we provide. They sign up, and then they grow on our platform. And it's a phenomenal company because the differentiation is, you'd say, well, you're a tiny company relative to Amazon and Google and Microsoft. Why do you exist? Well, those companies are billions, tens of billions of dollars in revenue. They're growing massively. The market grows around 23% or so. They're each growing around that amount on that massive installed base of revenue. So they target the biggest customers in the world, enterprise customers, giant workloads. And what they don't do as well is they don't serve the little people, the little developers, the individuals, the hobbyists, the people who are just trying to, maybe it's their side job. They have a day job and they go home and they want to learn how to code so they can start their own business. They'll never get any attention from the larger companies. And so our solution is differentiated by being super simple, very, very simple to use, which means it's not as feature rich as the big guys, but that's on purpose. The pricing is lower and very transparent. Like the hyperscalers, they call them, the big guys, their pricing, they have so many options and so many knobs you can turn on what you're buying, and so much of it is usage based. It's almost like the old days in telco where you need a person dedicated to understanding your bill. It's very unpredictable, hard to understand. Ours is incredibly simple. We also provide a level of support that you don't get if you're a tiny, like our largest customer wouldn't be a named account in any of the big hyperscalers. They wouldn't get a phone call. Like you couldn't get support. Well, we provide a high level of support. And then I talked about our community. We have, hundreds and hundreds of thousands of developers that love our platform, and they have, subreddits, and they have Discord channels. And a lot of times when somebody posts a question on our site on how to do something, it's the community, it's our developers that answer it often before our support organization will even get to it. So we're purpose built for that smaller customer tier. And it's still a growing, the market size, IDC has it as like $114 billion market growing at 23%. So it's growing incredibly well. And we've got a very strong competitive moat. The reason I joined is, I'd been in telecom, and I'll talk about this a little bit later, but I've been in a lot of tough industries. I was in telecom meltdown. I was selling to restaurants and retailers when the financial crisis hit. And then, back in Zayo when we were trying to grow 3 or 4 or 5%, and we had massive leverage and spending $1 billion in cash every year. And I saw DigitalOcean. I'm like, you guys are growing in the mid 30s. Your growth has slowed to the high teens, and you're complaining about that. And yet you're already generating free cash flow, and you got this giant market opportunity. I'm like, this is an industry I could get excited about. And so I came over, and I've been here 18 months, and it's been a bit of a wild ride in my tenure. We've had some challenges and some opportunities, but I'm very excited about where we sit and the growth trajectory that we're on.
How is AI going to impact what this company was founded to do? And I'm thinking of the customer base you just described, how as they adopt AI strategies and offerings, look to enhance their offerings and adopt AI internally, I guess, as well. I mean, they're going to need more computing power. Therefore, DigitalOcean is there for them. I mean, is that the obvious connection? Or
there's two connections. One is, as you described, which is the same way that we made cloud computing accessible to smaller customers, we're doing with AI. Like if you hear, like you're watching, the amount of capital that the hyperscalers are spending, and some of the others that are in the industry spending, hundreds of millions and billions of dollars of capital, and they're selling to the hyperscalers who are using the AI compute capacity, and you've got all these frontier LLM models that are spending tons of capital. Those people are burning, those companies are burning tons of money investing in this. They have really extensive technology teams and a lot of expertise. Your average software developer and small technology company can't deal with that. They don't have the money. They don't have the expertise. They need it to be simple. They need it to be accessible. So we're providing AI compute capacity to those same customers in a much more digestible way. They can do it on demand. They can do it at much smaller kind of chunks of capacity. And so they can build them into their own applications. They can build AI capabilities. So that's kind of number one. But the second is we're going to use AI to make our service easier to consume. So imagine if you had a multi kind of country application running, and you had droplets, which is what we call our kind of unit of compute running in each of our different locations. And you just typed in, hey, my service is running slow. Can you tell me what's the problem, and please fix it? Like if you could use AI to do that, and then that looks into the logs and figures out what's going on with your servers, and then makes a suggestion on how you might improve your the way your platform is operating, that's pretty compelling. And so we'll use it to both enhance the way we deliver our solution, and we'll make that technology available to all of the developers building on our platform so they can build it into it as well. It's a huge upside for us.
As someone with a corporate strategy background, or a strategist, curious about your finance function and whether what many of us would think of as a traditional finance function, however you might structure that. What's your vision for the function in terms of how it's organized? Is there some of the traditional roles? Would we be surprised to know that you have fewer accountants, more FP&A? I don't know. What would you tell us about the team and the organization, the finance organization? What does it look like? Does it look different?
I'd say the core functions don't look different, and in fact, like I have a very very strong chief accounting officer. That's like a prerequisite for me. I'm adept at accounting. I understand accounting. I'm experienced in accounting. But boy, you want somebody who's lives and breathes that. And Sherry Barrett, who was our chief accounting officer at Zayo, and brought her over here to DigitalOcean. She's phenomenal. So it's a traditional accounting organizations. We're small, but it's traditional. My FP&A organization is traditional. What tends to be non-traditional with me is I'll pick up other things, periodically based on the need of the company. So I had, as we had a CEO transition, I picked up HR and legal, which I had back at Zayo. I've owned things that are not traditional kind of finance, and that's been if you looked at my organization, you'd say, that's a weird one. I'm like, yeah, it's for now. And if it makes sense, as we grow the team out, it may make sense to spin that back out, or as somebody, we develop in the organization, maybe they move out and they report directly to the CEO. So that would be the main difference. But within the finance function, I'm pretty traditional, and I rely on, incredibly strong bench strength underneath.
Can you tell us something about your mindset when it comes to FP&A professionals and how you use them, or are they? And I imagine the team's not very large when it comes to FP&A. Most teams aren't with this weight class of company. But what would you tell us?
I'd say, and hopefully all my team would say, oh yeah, that's definitely him. I highly value and appreciate. Get the numbers right, get them done on time, make sure that you can explain them. That's all great, and it's incredibly valuable to the company. But where you really differentiate yourself and you add value is when you get into the why. Why is this going up? I see the number. You've told me where it is, and you've said, yeah, you can explain it because this number is bigger than it was last year. And okay, I get it. What's driving that, and what do we think we should do as a result of that? And so I try to build an organization that's intellectually curious and that has strong partnership skills with the rest of the business. So we have people aligned to our go-to-market team, people aligned to our product and technology team. And my aspiration is the FP&A people are viewed as just extensions of that leadership team. And they're in there, they're understanding what's going on with the business, and their role is to communicate the numbers and to help provide some guardrails and to give feedback and to do the budget process. That's all great, but if the more they understand about what's going on, the more they can kind of understand when they're looking at the numbers to give feedback to those leaders so that they can be a strategic partner. So I'd say, again, goes back to my career. I try to train FP&A to be more like consultants than just reporting function.
Yeah, as you were explaining that to us, I got that visual again of the slide deck being slid back across the table at you. Something you might do with your FP&A people from time to time, saying, we can't socialize this. If you want the rest of the organization to digest what you're telling us. Do you have any examples of where maybe AI has contributed to the planning process? Is that yet happening? Is it? I'm sure everyone's experimenting with AI in different ways, generative AI. Has your FP&A team begun to experiment, I guess?
Definitely not yet. I'd say there's a lot of caution around putting numbers in anything that is not wholly owned and run on premise here. But there's a huge, again, AI is a big part of our commercial and our go-to-market strategy. So we've got a tremendous amount of activity going in providing AI solutions. But we also have a project internally where, and like HR is going to be one of the first areas where we try it. I'm sure a lot of companies are doing this. Why aren't all your policies and employee handbooks and everything, why isn't that all in the chatbot where you can just ask the chatbot, hey, what's the holiday schedule for this year? Or, I need to take paternity leave. What's the policy? Like, why couldn't you just ask a chatbot that? That's something that we're clearly playing with. But the financials, that'll probably, I'd imagine, be a lagging kind of effort.
So is it going to be organic growth going forward? Are acquisitions part of the future? But can you tell us organic versus inorganic?
Yeah, most of our growth is organic. We have done a handful of acquisitions. We did an acquisition right before I got here in the fourth quarter of 2022. It's about 10% of our revenue right now. But our growth is you can build it up. If we think this year we're going to grow about 13%, we get about 8% growth just from waking up every day and people hitting our website and signing up with their credit card. So, that's that organic motion that we have, the self-serve motion. We get about 3% of growth from our AI business, just because it's relatively new. We bought a small company last year, and we're growing annual recurring revenue. Second quarter this year was 200% up from the before we acquired it. So that's 3 points of growth. That business, the managed hosting business that I described that we had acquired, that'll give us about 3 points of growth. The challenge and the biggest focus right now is in software. I'm sure you hear this term all the time: net dollar retention. It's how much do the customers who were here a year ago spend with you today? So if you had customers last year at this time that were spending $100, and you measure it today, are you getting more than 100 or less than 100? And good, growing software companies typically get more than $100. They get a net dollar retention that's above 100. Ours had been as high as 118. And then as the software slowed down and the market started to slow down, it dipped below 100. It's sitting at 97. And so if you think about that, that's a leaky bucket, right? So our existing customers spend 3% less a year later. That's 3% you have to fill and then grow again. So, we're very, very focused on increasing our product velocity and developing new capabilities to enable our customers to scale on our platform. And that should get that NDR, which it's already trending towards 100. But we'd like it to be, 100 and change would be a way better position to be growing than sitting there with a headwind.
Okay, excellent. Thank you for that. We're going to jump to what we refer to as our finance strategic moment question. And what we're looking for is just a moment in time where you experienced some strategic insight, led you to, because of your lines of sight into the organization. And we know you weren't necessarily a finance executive way back when, but certainly you always had those lines of sight, it seems. Anything come to mind when we ask for a finance strategic moment?
Yeah, and I'm not sure if most of your guests give you ones where they screwed something up, and so I'll I'm not the first. I'll lead with that. So it's ironic because we just talked earlier about my whole career was in challenged industries. So, telecom during the telecom meltdown, selling to, a VC backed company in 2008 when the financial crisis hit. Sequoia sent out its famous presentation saying VCs, you should close down half of your portfolio companies and the other half, you should tell them to cut half their expenses right now. So I've always lived and worked in constrained environments. Constraints are like, you don't have everything you need. You got to figure out how to get by. You have to scrape by. So my lesson, my finance insight was how powerful that having a constraint can be in the strategic planning process. And I learned it the hard way. It wasn't a big mistake, but it wasted some time for sure. So right after we went private, so I'd been a CFO for only 3 years, and I'd only been a private company CFO now for a year. We had just changed most of the leadership team, transitioned, as oftentimes they do when you do a take private. I was the only C-level executive left. We brought on a new CEO. That CEO brought on some new executives. We're all fired up and excited about all the things they could do with this great platform that we had. We had 2 large private equity firms that owned us 50% each, and they were really excited about all the things that we could do. And so we went through the strategic planning process, for the annual plan, and I was a participant in that. And we even hired one of the big 3 consulting firms that I'd come from that space, who came in and helped us think through, like, hey, you should reinvent your operating model, and they could kind of blow up the structure. Let's just say we had a lot of people with a lot of ideas, and we had a lot of fresh capital that had just come into the company. And so we went through the budget planning process, and I was involved and I was steering the process, and I was, I don't know what the right word is, but let's just say I was very supportive of their energy and saying, hey, well, that's an interesting idea. Yeah, we could do this, we could do that. And so when we put the initial plan together, I hadn't given them any constraints. I basically said, well, I just want to hear. I don't want to be the person who's saying, no, you can't do it. I don't want to be the person who was I've been at this company and everything we do is the right way. So I was open to all their ideas. When we rolled up what they wanted to do, it was a nonsensical and ridiculous plan. It was like double the company and people and the payback would have been forever. And I looked at them like, well, that was a waste of a planning cycle. It was like a month, it was just a complete waste, because I'm like, the plans we got back, because they weren't constrained in any way, were again nonsensical. And I'm thinking, my first reaction was, well, why wouldn't they just be reasonable? And then my second reaction was, dummy, that's your job. It's like, your job is to put constraints on them and to give them some kind of guidelines so that they know, in which the realm of the envelope that they're working. And people make better decisions when they're constrained, because they have to make trade-offs. If they don't have constraints, then every idea is a good idea. And so they don't work as hard, and they're not as creative, and they're not as thoughtful. People tend to do their best work when it's, and most innovative and creative work, when you're like, okay, we've got a limited amount of time, we've got a limited amount of money, and we got to get this done. We're going to be audacious, but we're constrained. And that's something that has stuck with me. Let's just say that now the people in my world, they understand that I appreciate constraints, because I give them a lot.
CFOs and controllers, does expense management feel like a necessary evil? It's time to switch to Brex. Brex automates and accelerates spend management with easy-to-use corporate cards, travel, expense management, and bill pay, all on one AI-powered platform. Brex makes it easy to boost efficiency and compliance enterprise-wide and free up your managers, employees, and accounting team for higher impact work. Top companies from startups to enterprises are using Brex to automate manual work and transform their finance operations. We're talking DoorDash, Robinhood, Airtable, and countless other industry leaders. Ready to join them? Switch to AI-powered spend management at Brex.com.
We're going to jump to our mentoring round, where we'll ask you several quick questions intended to inform and inspire future finance leaders. We get to return to that first 60 days when you stepped into the CFO role at Zayo. And I always ask this question. It's not just because of you, but I think it's even more appropriate for you. You had been in C-suites, you'd known so much about companies, but when you stepped into that CFO role, that first 60 days, was there something that surprised you, something you didn't know, like, oh, that's part of this too, huh? Is there something that about the role that you just didn't fully appreciate?
Yeah, I guess I always assumed that everything, for a company of that size, and any company that is able to be a public company and execute as well as it was executing and generate the kind of returns it was, that things must be pretty well oiled. Like, they must have things pretty dialed in. And when I got in, I was and this was a part of the stage of that company. It was trying to grow up and scale. But when I just scratched a little bit about, okay, how do we do like just basic things like the accounting system? Well, the accounting system was it was, I think, 26 instances of Great Plains software, because we had different currencies. It was like a middle market software package, and we weren't on Oracle or anything. So I was like, oh, that's interesting. And then I talked about, well, how do we make decisions on spend and like who controls the CapEx? We had a very distributed spend infrastructure. And so the epiphany for me was like, ooh, like, people get by at pretty big scale without having a ton of kind of, super dialed in process, and they can be super scrappy. And at some point you reach the end of that rope where you gotta make that change. And I had just assumed at that scale the company would have been much more dialed in. They were really effective operators. They were super scrappy, but as a result, the company had yet to invest in a lot of system and process and controls.
Interesting. Well, we always like to ask our guests to reflect a little on the personal side. We're wondering, Matt, if there's something most of your colleagues might not know about you, something interest of yours, something you've pursued in the past, something that happened. I don't know, but anything come to mind, something that most people don't know about you.
So if you ever spend any time with me during basketball season, we're huge. My family's huge Celtics fans, and it's because I lived in Boston right out of school with my wife. We've been married for a long time, and we went to the games a lot. And but I'm a horrible watcher of games and my kids literally will take videos of me. Like when the Celtics are up, I'm like, oh, they're going to lose. And my wife's like, they're up by 20. I'm like, yeah, but they just lost 4 points in a row and Jaylen Brown's not doing this. And I'm uncomfortable. And so about 4 or 5 times I've caught my family videotaping my emotional reaction to watching the games. And they send it amongst themselves. And they may have been posted on Instagram somewhere. Uncomfortable dad watching Celtics games. So that's what people don't know about me.
Perfect. Thank you. Wondering if there's a book or a resource you'd like to recommend to us. And again, it could be a podcast, doesn't necessarily have to be a book. Something that maybe influenced your thinking along the way, though, or it could be a book that you escape with or something you'd like to listen to. Anything you can share with us?
I'll give you a book that I read recently, Game of Thrones, and I've read lots of kind of old, back from when I was in middle school. That'd be my go-to reads. I read Harry Potter with my kids and enjoyed that. But the book that had the most impact on me recently, actually our new CEO recommended to me. It's called 10X is Easier Than 2X. It's by Benjamin Hardy and Dan Sullivan. And the premise is real simple, and I think you'd like it because it uses case studies, examples of people. They tell stories of people. And the premise is it's a lot easier to think like how to make a order of magnitude change than it is to just eke out a little bit better kind of performance. And the reason that they say that is, okay, if you set a goal and you say, well, what would it take to take DigitalOcean? We'll do just under $800 million of revenue, this year. And if you said, well, what would it take for you to get 20% more revenue? You'd be like, oh, well, I'm going to tinker with it. I'm going to do this. I'm going to do that. And I'm going to try these things. And maybe I just work harder and I can get there, right? We'll just try harder. But if you said, no, I need that to be a, $800 or $8 billion company, what would you need to do? Well, then you got to step back and you got to say, well, it's not going to be because we just got more efficient or we just drove the productivity up here. We probably have to go into different business lines, or we probably have to get out of this product and get into this other product. We'd have to change the market that we went after. And so it pushes you to get out of your comfort zone and think big. And then, the examples they give are, and this is very relevant for me and my personality, is just putting your head down and just working really hard and trying to plow through it is not enough. Particularly when you're at our level, you got to step back and say, no, I need time where I'm not doing that, where I can just think about the big, like, okay, where do we want to be in 3 years, and what are the audacious goals that we could take. So it was impactful for me. It's a good read. I listened to it, and I'd highly recommend
Excellent.
it.
Thank you for that. We're up to our final question, where we're going to ask you to look forward finally. And what we'd like to know are your priorities as a CFO for the coming 12 months. What would those be?
Yeah, they're very clear. I mean, we need to get growth back. We're growing in the low teens. We need to get growth, up into the high teens or into 20s. The market is growing 23%. We should be growing that fast. How we're going to do that is we're going to improve NDR, which is getting our existing customers to spend more with us, and the finance organization plays a big role in understanding what's going on with those customers and trying to identify those customers that have a higher propensity to buy. And so we're doing a lot of analytics work, working with the go-to-market organization. We're also spending on this new AI business. As I said, we grew ARR 200% in the second quarter, and there's a lot of investment that needs to go into that. And so we're very focused on, okay, what's the right capital allocation strategy? And we're sitting on a ton of cash, and we generate a ton of cash, and what's the best use of that cash across buying back shares or repurchasing our debt or investing in AI capacity. So it's really about enabling the company to grow and doing it in a kind of cash flow optimized way and driving free cash flow per share, which is our kind of our anchor metric.
Matt Steinfort, thank you for joining us on CFO Thought Leader.
Jack, thank you very much. I enjoyed the conversation.
Hello
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, thank you for listening.